Joe, I just want to start right with those pending home sales. That data, not necessarily great. I'm just wondering, when we're this late in the economic cycle, how much concern should we have about this weakness that we're seeing in the housing market?
Well, I think it's clearly a disappointment. I mean, one thing I think, that has confounded us around the housing market is giving the increasing confidence of consumers, the still low rate environment. We should be seeing a greater contribution to growth from the housing market. We saw somewhat disappointment today. The one area of disappointment in the GDP report was also housing. It's slightly subtracted from growth. So I think that's emblematic of a broader issue starting to envelop the U.S. economy, which means there's some supply constraints, the housing market clearly being one with respect to tight labor market.
Do you see any demand issues there as well?
Not demand as much as supply. I mean, clearly we've seen a deterioration in housing affordability with the significant rise in home price appreciation. Some markets well beyond the 2006, 2007 levels. The rate of home price appreciation, however, has been one of two big sources of improvement for consumer balance sheets, the rising stock market clearly being the other one. So net, it's been a positive wealth effect for consumer spending. We still see it fairly strong. I think it's more of a growing supply side issue. Given the labor shortages, we're starting to envelop a larger percentage of the labor market.
Joe, I want to talk a little bit here about rising mortgage rates and the effect that that's having a little bit on the housing market and valuations. Is that anything that the Fed would be concerned about at this point?
Well, I think if anything, it just gives them more of a bias to action. I mean, our theme continues to be a Federal Reserve that's appropriately emboldened to continue on their gradual path. Now, we do not see any material risk of them accelerating the path of their rate hikes, but we do see the Federal Reserve raising rates 2 more times this year, 2 more times next year. And if we're right, that if anything, we'll keep long-term mortgage rates, long-term U.S. interest rates anchored generally at the current level. So it'd be more preserving the recovery rather than trying to staunch it.